one of the most prolific entrepreneurs of our time. Thank you so much, Nithin, for joining. A lot of the founders in the virtual room today are very excited to speak with you, and we're all looking forward to your learnings.
Hey, thanks for having me on this. I don't know about prolific and all of that, but yeah,
No, I think it's just a very, I mean, for the lack of a better word, inspiring to see how you built Zerodha across years and now decades, hopefully. And I think we want to condense all of those learnings in this 1 hour session. Just as a counter for the audience, right? The way we'll do this is for the next 30 minutes, we have a couple of prepared questions. The team was kind enough to share some of them in advance, and we'll be asking that to Nithin. And post that, we want to make this as collaborative as possible, and we want a lot of engagement from the audience. So we'll take audience questions and we'll do that. But to, I think, get us started, I mean, I don't think there would be a better point than going back to memory lane. It's almost very interesting when Zerodha got started, considering that there was a downfall happening in the financial system. Brokerage was not the most sexy business, perhaps, but still you got started with a very unique model, the flat fee model, which some may have considered to be almost like a wrong proposition for a business because it wouldn't make immediate money, right? So if you can maybe take us through how your entrepreneurial journey started from a trader to a broker to Zerodha, I think that would be really interesting, Nithin.
Yeah, no, see, the thing is, I started trading in the late 90s. So I was 16, 17. So, I mean, before Zerodha, I had attempted a bunch of things to put food on table. So I had done multi-level marketing firstly, so I was one of the first guys of Amway in India. And then there was another company called Symbionic for which I had done multi-level marketing. I'd worked in a call center for 3-4 years. So I traded, then I became a sub-broker for Reliance Money. And yeah, in 2010 is when Zerodha started. I mean, when we started in 2010, see, the thing is, this whole flat fee per trade model wasn't unique, in the sense, discount brokers in the US had started in the early 90s. Guys like Charles Schwab, E-Trade, etc., who used to charge $5, $7, $10 a trade. So as a concept, it wasn't unique. But in India, we introduced it for the first time. And, there is a very thin line between, being passionate and being foolish. In hindsight, it seems like I was very passionate, but, it was kind of borderline foolish to start a brokerage firm in 2010 when really it was like the worst time to start a broking business. But when we started, there were no grand ambitions. I mean, the idea was to build a trading platform for very active day traders and futures and option traders like me or my brother, back then. So the best case outcome for Zerodha was 100,000 customers. I hadn't, ever imagined life beyond 100,000 customers. And so I mean, there wasn't any grand targets. The plan was that if people don't come use us as a platform, I get back to trading. So what happened was Nikhil continued trading the markets. And he was a better trader than I was. And I was, I always had this whole kida of trying to talk about markets, educating. So I used to run some really large communities even before Zerodha, And, when I say really large, in today's context, it seems small, but back in the day, Yahoo Messenger group with a few thousand people on it, Orkut community with a few tens of thousands of people on it, and etc. So there was some kind of a background, of dealing with traders and very active investors. And so the plan was, I don't know. I mean, you guys are all very young, but back in early 2000s and mid 2000s, right? In Bangalore, we had this whole pub culture, right? As in, you like rock music, you like beer. One of your friends says, what, I'll set up a pub. It was almost like that. It's like, like you're interacting with all these traders, and we got this opportunity because in 2008, we made some money being short on the markets. So it kind of gave us an opportunity to get started becoming a stockbroker. Now, the thing is, there was no tech background at Zerodha. I mean, I've done barely some Excel in my life. So when we started, the trigger point was really, the National Stock Exchange gave a free trading platform for its members in 2008. They launched this platform called NSE Now. So essentially, you got tech for free. So the question then was, is there a way to disrupt on pricing, right? So that was really the trigger point. It was almost like if some of you trade the markets, it was almost like an arbitrage trade. You have mangoes being available at 10 rupees a kilo in Hassan, and someone wants to buy at 50 rupees here, so you have an arbitrage opportunity, right? So,
Yeah.
The platform coming for free, I think we got very lucky because no one was looking at stock markets in 2010, right? And we were the first ones to spot that there's an opportunity to leverage this free tech and kind of disrupt on the pricing. One was pricing, and second was transparency. I think that was something which was right on top of my list of things to do, because as a stockbroker, forget broking. They kind of, every customer is given a different deal. Based on your net worth, you get a deal. And the problem with that is, if you have so many customized deals, it's very tough for you to be transparent, right? If I am the founder of a company where every customer of mine has gotten a different deal, it's very tough for me to come online and talk about the business, right? Because I don't know what I've spoken to X and what I've spoken to Y. So this wasn't like I didn't have the foresight back then, but that it will help as much as it did for us as a business. But deciding that we won't offer differentiated deals and we'll offer the same deal to all our customers, in hindsight, was probably a lot more smarter thing to do than even that low brokerage thing, right? Because today now we have 1 crore plus customers, and every single customer has exactly the same deal. Our pricing that we started in 2010 is exactly the same pricing today. Almost exactly the same pricing. Almost, everyone in the company can answer any support query because it's the same thing we are selling to everyone. Now think of a restaurant that's selling only idlis, right? As in, your economies of scale kind of, in terms of, not just in terms of the front end, but even in terms of the back end, right? It kicks in really beautifully. So we've gone from 2 million customers in 2020 to 10 million customers in 2022, and we have not added a single person on the team, right? So so all of that benefit has actually was, when I look back right now, is from that original decision of saying, what, every customer should get the same deal and we should not differentiate customers. And it was very hard to stick with it because in the early stages, we had customers who come to us and say, what, Nithin, I'll give you 5 crores. I'll give you so much, 5 crores as my deposit, my trading account. I'll give you upfront 10,000 rupees as brokerage, right? And that time it was very tempting to kind of go for it, but somehow the gut didn't allow me to go for it. And in hindsight, one of the smartest things we've done as a business.
Got it. No, I think super learnings all across. Some bit of naivety definitely helps in entrepreneurship, as your journey is also testament to. And it's amazing how you started and kept the fundamentals. And I want to, double click maybe there. A lot that you also speak about is customer centricity, right? And that's an adage that goes on from the Amazon days. Jeff Bezos has been a huge proponent of it. But staying true to it, as you mentioned, right? The focus, it can be very tempting to do other things and, just like substitute growth, profitability, and other things at the expense of the customer. Much of your bootstrap versus VC argument is also on that basis. If you have, bits to share as to how to manifest this customer centricity in reality, right? How maybe Zerodha has done it over the years and you continue staying true to that promise, and how young founders can take a cue from that and establish that as a focal area from the very start and never compromise it because it's so core to the business.
See, the thing is, I think starting and building a business today has become a lot tougher than, in 2010, right? Because there were a lot of inefficiencies. Hiring was so much more easier, right? Of course, access to talent was lesser, but it was easier to hire people. So I think, so we got extremely lucky that no one wanted to invest in us when we started, because if you had gone raise VC money, would I still be saying what I'm saying today? I'm not sure. This is something I question myself. Is today I have this whole story to sell, but what if in the first year I'd raised VC money and then I was forced to take the same route of going and continuously keep raising VC money, right? I think the problem, we've invested in a lot of companies now. I know a lot of founders. I think the issue with raising capital is, you sometimes have to, or most of the times you have to oversell to raise, right? As a founder. And I think that's a mistake, I mean, even because, it's very important to set expectations right at the start of what you're doing as a business and for what reasons, right? But it's very tempting as a founder to kind of, you know, oversell, right? As in, like, like, I keep meeting so many people who are building for stock markets, come and say, there are 9 crore, people have demat accounts today. Tomorrow it'll be 50 crores. I'm like, dude, what are you smoking touch? Because I'm from the industry, I can say this, so, but it's easy to convince a VC that, somehow India will have 50 crore Indians in 5 years who will invest in the markets, which is, I mean, I hope it does, but which is impossible, really, so, so yeah, so I think where we got lucky was because we didn't get investors on board. We never had to optimize for growth and revenue and all those metrics that today's startups are forced to chase, because they're forced to chase because you have investors on board who are asking, what are you doing, right? So my learning from Zerodha journey of having interacted with others is, I think, see, today when you build a business, you need to have some kind of a moat, right? Either you have to have the deepest pockets, or you have to have an offering that's very tough for others to compete with, right? And I mean, if you don't have either, right, I mean, it's a slow burn. I mean, you'll eventually get gobbled up or you'll die. I mean, there is really, there's nothing for in between. It's a law of the jungle, right? So, so by 2013-14, is when, venture capitalists started showing interest in Zerodha, because we were just trending up, and there were more VCs in this country, around that time, etc. And I think I went to my first startup conference in 2012-13. I mean, the first time I went to the conference, people were saying CAC, MAU, DAO. I was like, dude, what's happening? Like, I hadn't even heard of these terms until then. So once I started interacting with founders from other startups, I kind of realized that money brings obligations, and those obligations forces you to run a business in a certain way, right? And in a financial services business, when you are, I can't think of one thing that I can do as a business which is right both for the investor and for the customer, right? Because, like, in our business, doing less is the right thing to do for the customer, right? I mean, don't borrow money, trade less, invest less. I mean, be conservative, don't just, don't trigger customer to transact, right? I mean, that's really the underlying, I mean, that's really what we should be doing as a business. But each one of these things hurts the investor, because, it hurts the growth, of the business in the short term, right? As in, I see a lot of our competitors, like, even to open an account, like, you can't, when people open an account, when they come and invest in the markets, they're putting their hard-earned money on the table. This is not a Zynga poker app, right? I mean, this is not fake money, right? As in, this is real money that people are putting in, and you can get carried away and lose a lot of money as well. So it's very important right at the start that you set the expectation right, that this is serious activity, this is not fun, right? And that's one of the reasons, I mean, we are the only broker in the country who will charge an account opening fees, right? So we used to charge 400-500 rupees at this, when we started. We charge 200 rupees now, right? But that account opening fees is a way of, in my head, is a way to set the seriousness, right? Because if someone's paying you to open an account, I'm saying, you know what, only serious people are coming to me, right? I'm not going to give free t-shirts. I'm not going to give some, cash back. I'm not going to give free stock, because I don't want people to come with the wrong set of expectation that it is for fun, right? It should have been very tough to do as, as a funded business, venture capitalist funded business. One of the things, that happened because of this idea, we charged the fees when we started because of setting seriousness, right? Back in the day, an account opening was a physical account opening form, right? So people had to sign, courier to us. So there's a lot of to and fro and effort. So we said we will only put effort where we know the money's, the guy is paying some account opening fees. So it started off with setting seriousness, and then account opening became digital in 2016, right? You could open an account online, but we realized the power of that charging an account opening fees. So what it meant was our CAC is really a negative 200 rupees, right? So today when an account, when we open an account, we actually make 200 rupees an account. So if we have opened 1 crore accounts, we made anywhere between 300 to 500 crores just in account opening fees, right? So a lot of times when people ask me, Nithin, what is your CAC? I say negative because we haven't spent on marketing, advertising, and we actually made money. Now, the beautiful thing about not having spent to acquire users is you're not triggered to recover the CAC, right? Because otherwise what happens, right? As soon as you pay to someone to get a user, I mean, you're constantly thinking, how do I recover this money from the user, right? I spent 2,000 rupees to acquire a customer. How do I recover this 2,000 rupees, right? And then you're forced to, we've sent 10 push notification in the entire year, okay, on a mobile app. And now, if you compare some of competitors, they send 10 a week, right? And these 10 push notifications were more educational and, like stuff customers needed to know. Nothing to say, today markets are down, buy some stocks and stuff like that, right? So some of these things I realized, quite early on is going to be our moat, right? Apart from, of course, tech and products, etc. The moat also has to be that, we can do and say things that's very tough for others to say and do. And that's one of the reasons we resisted raising any capital. I mean, it was easy at the start, but the last 2-3 years has been ridiculously hard, because people have given blank checks and said, Nithin, go buy an island, go buy a plane. I'm like, you know what? I have no such ambitions in my life, so it's, but that, I think, Kailash, who heads our tech, joined us in 2013, complete happenstance. He was building a startup around where we had our offices. He and his friends dropped in our office, and then, I hit off and he joined us, and the product journey started. I think today, the most important reason for Zerodha to be what it is the product. But the second most important thing is that, is this whole philosophy around which, thinking of money as obligation and thinking of what is your true moat, right? As in, is this whole ability to say stuff which is very hard for others to do, is really, is a huge moat for a business. And I think it's invaluable. And so, I mean, but the problem, like I just said at the start, but today it is very tough to build a business without raising capital. So, if the early founders, my advice would be, you rather undersell to your investors than oversell, right? As in, because if you oversell, if you start off overselling to raise capital, you'll be forced to meet those oversold targets through your life, right? Set the expectations right at the start.
Yeah, I think we lost you for a moment then.
Yeah, sorry. Yeah. So yeah, I think I think it's best to undersell to your investors. Then it's easier because then you're not forced to kind of push growth as much. See, my personal philosophy is it's very hard to set a target and reach there. I think the right way to look at life is, you get up every day and you do something better as a business. You improve some aspect of it. How much ever you have to grow, you will grow, right? As in, it's very tough to, sit down and say, what, I want to grow 300% this year and go meet it, right? And the problem of putting such targets is it's never ending. I mean, your goalpost keeps pushing forward, and you're always constantly chasing something that you'll never reach. And it's not, I mean, it might be fun in the first 1 to 3 years, but if, at the end of the day, businesses can't be built in 1 to 3 years. It'll take, I mean, yes, of course, in the last 4 or 5 years, it somehow has made everyone feel that you can somehow build businesses in 1 to 3 years. But if you look at the past hundreds of years of history, it takes 5, 10, 15 years to be able to build a sustainable business. So what you're doing should be something that you can be able to stick to while having fun for long periods of time. So that's a couple of things. So.
That's super. I think a lot of core lessons there. I especially love the fact around, building a sustainable organization than just like substituting things and then managing expectations. I think super cues for young builders here. I think the next aspect is something around uncertainty, right? Because I think the financial services market, especially, right, it's a heavily regulated industry. There are a bunch of market factors that can impact so much of what you do, right? Because if markets are going down, then probably trading activity goes down and subsequently a bunch of other things. And in your decade of building Zerodha, there have been so many things around demonetization, UPI, and things like that, right? Can you maybe talk to us about how do you as a founder CEO cope up with externalities that are not in your control? And maybe what do you do then to build something which is, long standing and, have internal stability per se?
Yeah, I mean, I think it's thanks to my trader background. I mean, like after blowing up twice, I kind of realized the only way to trade is, is to at all point of time know your maximum loss, right? As in, because then you tend to remain rational when you're put in a spot, and being rational when you're put in the spot is really the most important thing in life, because most people panic when when you suddenly are put in a spot. I mean, if you can think of what is that situation that can put you in panic and be prepared for that. uh, I mean, as a trader, I was doing it on every single trade, so it's very easy to say but very tough to follow. But almost every, even if I'm walking, up say, I'm going hiking, I've already thought what potentially all the risks of the hiking, and what all can go wrong, and I've already kind of tried to make peace with all those outcomes. uh, so it's that way. I've, while there has been a bunch of volatility in the markets, and in the business when you started, those downtimes haven't really been very stressful of sorts. The second thing we have done is, as a business, I think what we've done right is we have never spent to grow. Right? I'm not talking just about marketing and advertising. Even it's hiring and spending on infra, etc. Right? So we've said, as and when we grow, we will add more. Right? Because it's, our business is very volatile. It's very tough to call. I don't want to build up so much expenses that like I'm worried about 6 months of runway, right? As in the sense, like something happens for 6 months, and then at the seventh month I'm worried about where is my runway types. So this is something right from the start. I mean, we have grown slowly, steadily. We've taken time. We've learned from our mistakes, and I mean, there was never a rush. Not a single year we've gotten up that I want to be at this revenue number, or I want to be at this user number. I mean, we've said, so we've been extremely frugal in the way we work. So today, like for example, we have 11 and a half year runway. So like, so tomorrow, like tomorrow morning, I can get up and say, what, for the next 11 years, if I don't make money as a business, I'm still okay. I can still pay everyone's salaries, and and come through. I mean, I'm sure at the end of 11 years, I would have found something that will generate me, some money. So that kind of puts you in a little bit of peace. So because if you can run the business frugally, and see, but the thing is, see, this isn't really the only way to build a business, right? One of the reasons I come and tell my story is because people need to know there are different ways to build a successful business. I mean, and I mean, I have friends who've been completely aggressive and just raised as much money as quickly as possible, and gone build businesses. So there is another way to build as well. But but yeah, you could be conservative, frugal, and say, what, I'll take my time to grow and also build a business. So yeah. So I think if you would ask me, how have I not jumped off a building because of all the volatility running Zerodha? It is because I have at every point of time, known that no single thing will gonna ever push us off track of sorts, in a sense. The only time which has been very frustrating is when things have not been in your control, which is around when we were scaling in terms of tech. So around 2017-18 is when we first suddenly saw a lot of scale. So we had some downtime, etc. And when you build the business with so much love and thinking of users all the time, and you're on social media and you get all, you get trolled, it's very hard to handle that, so so that, I think, one or those few days when we had downtime issues in 2018, I still get nightmares. I don't know how I didn't jump off building that day. But apart from that, I've been quite, we haven't really been in a spot because we've been very frugal as a business.
Got it. No, I think that's very fair. And I think the trader mindset is a cue for everybody to maybe read more about, but super to hear that. I think there's another dimension to the Zerodha story, which does not get as spoken of as much, which is the attrition rate at Zerodha and the team you've built, right? Because we've heard the bootstrap story, we've heard the profitability story, but a lesser known or as not as much known fact is, the core team has stayed around for a really long time, and you've built a very, very strong culture that despite, tech salaries and stuff like that, and so much attrition happening across companies, even the biggest startups in the country, Zerodha has, had this bunch which has stuck around. As, young builders listening to you, what are your cues for maybe team building? How do you set fundamentals from the very start that can scale with time, right? And despite the organization getting large, you can still retain your group of people who've shown initial faith in the company, right? If you have cues there, I think that'll be very, very valuable.
Well, I think it's the same with investors as with the team, is to not oversell. Right? It's very easy to try finding your team by overselling the opportunity, because if you oversell and if you don't meet that expectation, and it'll feel like a failure, right? I've been brutally honest about all the issues of the business every time I hired anyone. So I've been very open, saying, what, any day we could get up. Even now, I keep, internal communication. I keep saying that any day we can get up, one of the regulations can, reduce, bring our revenues down by 50%. Right? We're just one, regulation away from losing 50-60% in revenue. Right? So it's just being completely brutally honest about what are the risks associated. I hardly ever see founders do this. When people are hiring, it's you're always showing all these rosy pictures saying, I am $10 million valuation, I'll become a unicorn, and all that random, right? You're trying to, induce greed to hire, right? Which is, people who come for greed typically leave for more greed, right? As in, it isn't the right way to hire, according to me. Like I said, there are businesses that have done well by doing, quickly hiring and, still build a large business with large attritions, etc. But personally, that has really been, I think, look back, one of the reasons I think people are stuck around is being completely brutally honest, even before hiring. We have never promised ESOP to anyone before hiring, right? I've said, the business can go to zero, but if it does make some money, we'll make sure we'll all, we'll all see upsides of this. But there was no, I'll give you these many shares at this strike price and, and all of that. We've never done that. Even today, our ESOPs is more RSUs and not ESOPs. So everyone gets at zero strike. So there is no, there is no strike price we are chasing, because, so it isn't that, like sometimes I get asked this question, that did a lot of people make a lot of money in ESOPs and that's why they stayed? Yes, a lot of people made money out of ESOPs, but that was just over the last 1-2 years, because, there was no ESOPs that we used to hire people. So the other thing I think is, people get carried away with education pedigree, of sorts. We have zero from IIT, IIM, or any pedigree institute. So we've generally hired from mid to second grade kind of colleges. We have not even actually ever bothered about what background they come from. It's really, if you think that person is, he kind of likes the cause that you are going after. And if he has basic common sense and decent communication skills, etc. Right? If we can check mark against these, but it's a much harder way to build a business, because the boys who come from pedigree background tend to be sharper, for sure, right? So the odds of finding a good person hiring from, say, IITs, if it is say 5 out of 10, the odds of finding it outside is maybe 1 out of 10, right? So the odds are lesser. But the thing is, if you can help people get better in life, people stick around, right? The issue with pedigree education is people come assuming that their shit doesn't stink, so and that's what they've been sold through their lives, because like I have my friends who are first rank in everything, right? I mean, through their life, all the teachers, all my parents, and my friends' parents, everyone are like, oh, he's a first ranker, like, dude, what are you eating types, uh, so that attitude carries on, and in a startup kind of a culture, that attitude doesn't really fit very well, so I'm not generalizing, so not everyone's like that, so excuse me on that, but this whole, I think, attitude is a lot more important than even skill set of sorts, so because people with good attitude tend to learn and get better with time. It takes time, I mean, they're not, if you're not sharp enough, you'll probably take 3 years to learn something which you would have done it in 6 months if you're extremely sharp, so I think all of this. Also, another angle at Zerodha is that, I don't know how many know this, but we've committed to give away a lot of our success. And so we have a foundation called as Rain Matter Foundation, I mean, through which we are doing this. And so people know that as well, that angle as well, right? As in the fact that, if you're working, we're generating some success out of this, it's also going back to the society in some way, so. And so yeah, I think all of these things have helped in some way.
Absolutely. No, that's brilliant to hear, and I love the philosophy there as well. But I think we're at the halfway mark of sorts, just a bit above it, and we have a bunch of questions from the audience. I see Yatin has a question of Upotech Labs, right? So we'll go to audience questions, make it as interactive as possible. Feel free to directly direct your question to Nithin itself.
Hi Nithin. So as a founder, right, I think part of the question you have already addressed, which is always you have temptation to grow bigger or do something more, right? And like for your case, you be thinking like, I can take money, expand beyond Indian market, or go to maybe expand to Singapore, etc., etc. So how you balance those temptation? How you basically balance between in a way temptation versus ambition, right? Like it becomes harder many times for us, even with lesser money, like we wanted to do a lot of things. So how do you balance that?
I don't know if there's a right answer to this. I mean, like I get up every day with a new business idea. And so one of the things I've done personally is, when I get all these random things to do in my head, I write it down, like I make an essay out of it. I sleep on it for a few weeks, and then I start bouncing it off with some people in the business who are extremely critical of me. There are very few people, who will, like Kailash, for example. He's like almost like my life guru of sorts, So he's usually the first person I send this out to, and he's normally very brutally honest. I mean, see, the thing is, we decided long back that, I mean, I have no ambitions to become an ICICI Bank, HDFC Bank. Okay? I mean, I don't want to be a financial conglomerate. I think people shouldn't borrow money. Okay, so I don't want to do lending in any form. Right? I think people borrowing money to buy things that they don't want to own. I mean, they ideally don't need is not just bad for them. It's bad for even the planet, because excessive consumerism is really what is killing our planet. Right. So I have that philosophy, right? I have a philosophy that I'm not going to lend. I don't want to become a bank. I mean, so really, like, it's like we found our hole and we're going to get as deep as possible. But once in a while, there will be some distraction, right? So one of the ways, so the thing is, as a trader, right? When there is money in a trading account, right, you're always triggered to trade, right? In the sense, like say, when you're an active trader, the best trades are when you're not doing anything, right? You're just sitting and analyzing. But as a trader, it's extremely hard to sit down and not do anything, right? If you're looking at something, you want to do something, right? So I kind of realized that the way to do it right is to not have money available there at all, right? So just keep the bare minimum money. So even when I do a stupidity, I know what's the maximum I lose, right? As in it's just limited to this. So in the business, we said, in 2015, we started Rainmatter Foundation, Rainmatter FinTech, which is a FinTech incubator, etc. I said, all these moonshots, which are adjacencies, I will not do it myself. I'll just collaborate, right? So I said, we will give 2 to 15 crore rupees, is what we check. We cut, we used to cut checks for 2-3 crores in the start. Now we cut checks of up to 15. And I said, so I still get to, tickle my, that whole kida of wanting to do something, but I also know that I'm not really, derailing the business of sorts after, going after that attempt. So, and in the process, we ended up partnering some amazing companies. So, for example, Ditto, which is FinShots is building an insurance business called Ditto, and so this insurance has been a kida for like I don't know how many years. Okay, so like every few months I would get up and say, someone would complain about being missold an insurance, and I'll be like, dude, we need to change this. And eventually, when FinShots guys came to me, I was like, oh, this kida is done for my life now. These guys will solve for this problem, and we said we'll support you guys. So yeah, so that's how I've been, trying to, ring fence myself from doing stupidity. But I think it's, every business has to figure out your own ring fences. But it's very easy to get distracted. There is no two doubts about it. Because as a founder, we're all generally optimistic types, right? So every opportunity seems like the next big opportunity. So that's essentially how. If all of you are founders, we're all wired. That's why we do very well, right? So yeah. So as optimistic people, it's very easy to get derailed.
Yeah.
I think we lost Nithin for a while.
Trying to go after 1, 2. Okay, is it better now?
Yeah, a bit better. Yes.
I don't know what's happening with my internet. Okay.
No worries. But
this is something I think is part of life as a founder. I'll take it like that and always stay focused.
Yeah, no, I mean, very easy said than done. Every Monday morning I start a diet. By Wednesday evening, it's over. So it's, the idea is to do as little stupidity as possible. So, when I want to binge on chocolates, I have dark chocolates with very little sugar. So I know I'm going to break it on Wednesday night. So, I'm trying to cover myself saying, when I do stupidity, how big a stupidity I do, So, so I think, yeah, it's very similar to life as well, business as well.
Got it. Super.
Yeah.
Thanks for that question. I think Khushbu has a question. You want to go ahead?
Yes. First of all, I would just like to thank you for sharing these insights, because I think for me personally, you brought me back to the core with which I started my venture. It's along the way, like you said, you get to meet potential investors and different people in the market, and they tell you their own views and how the market currently exists and what you need to do to be at par with what the industry requires. It sets so many different things which you did not want to start with, but you need to get accustomed to because you need to survive. And so just to give a background, I'm the founder of EdCaliber, which is a real-world focused mathematics learning application for high school students. Our entire goal is how can students connect the theoretical math to where it is applied, like, for example, linear equations with space science, geometry with baking a cake, and so on. So ours is a developer who's working part-time, who creates this content, and then we test the hypothesis. But in order to keep generating content, we do need more investment, because we need a game designer, we need a UI UX person and everything into it. So whenever we speak with the investors, I feel like when I provide practical projections, which we feel like these are practical, they feel we are being too under ambitious. And so it feels like you are not allowed to be under ambitious. Like they want you to be aggressive and they want to be that way. And I personally feel like if I like if you want to go ahead, I keep on finding ways to be frugal. And I feel like I should learn game development and create it on my own. I feel like that sometimes. But to survive and get ahead, we still need funding. And we keep getting these suggestions like, okay, ask for more funding, give more projections. And I'm clueless. Like I get stuck between, my core and what I want to do. So what are your thoughts? What are your suggestions
Yeah,
on
no, I
what
think,
should I focus?
when people ask me, uh, I think the root problem for everything is this whole excess liquidity in the ecosystem, right? Even VCs, are kind of forced to chase quick returns, right? As in everyone's, everyone's
Yes.
wired, quarter on quarter, year on year, right? As in everyone wants to see quick results, and there is no quick results. I mean, see, some of these VCs are close friends. I mean, they're some of the sharpest guys I know, right? I mean, when we discuss about this, they say, dude, I have pressure, I have to return money in 7 years. Every investment I do, I need it to be like 100-bagger or zero, So, because if it is not gonna make a lot of money for them, it doesn't even make sense for them to invest. I mean, so there's some, certain limit. I think VC business itself has morphed into something undesirable in the last 4-5 years. I mean, I think I think the VC culture, the best VC culture was really the 80s and the 90s, before the dot-com boom, right? As in that's when people, VCs came in, they gave time for the business to grow, they experimented with the businesses. That's when you saw so many innovations happen. I mean, of course, not in India, in the US, but, but now it's just everyone, wants to put money and quickly see a return on it. Right? And it's a tough place to be. And one of the problems with that whole excess liquidity is the cost to build a business. One of the, like today, I don't think, with less than 5 or 10 crore rupees, you can even have like a MVP of sorts, right? As in, so if you want to hire a good tech guy, it's going to cost you 60-70 lakh rupees. I'm like, dude, I mean, how do you survive without raising any money? And if you want to raise money, you have to oversell. I see one of the things, there's something that I've been wanting to say on social media, but I haven't said, is one of the reasons why a lot of new age companies that I've listed haven't done very well on the stock markets is because when they were private, they were incentivized to oversell. But when you're public, you have to undersell, right? And a lot of founders and executive teams haven't been able to transition from, if you're a private company, you go and say whatever you want, right? I mean, I'm gonna go to the moon next year, right? As in, some VC will give you money for it, right? But if you're a public company and you're gonna say something and you don't reach it, you're gonna get punished like hell, right? As in, and this problem is not just in India, right? It's the US, it's any market you pick up, right? Transition from private to public haven't done well because the skills required to do well as a founder in a private company is very different to skill required to do well as a public company, right? And my guess is that VCs will learn that the skills are different and start encouraging founders to have different skill set and not to I think some of those questions are already happening over the last 3 to 6 months, right? As in, if you go today to a VC, he'll probably ask, when will you do profitability? And you won't just buy your bullshit of, I will have 1 million kids next year doing maths, So I mean, they'll probably ask, how will you, how much money you make, etc. But no, it's a hard problem. I don't know. I mean, we just hope that the VC culture, when money becomes tougher, and money is it seems like we're going to get into a phase where
I think there's a network issue again, if I'm not wrong.
Right.
Yeah.
Okay, I think he's back.
Okay, I'm sorry. Yeah. Sorry. Yeah. So so that was a long answer, but I don't know your immediate fix to your problem. But my best bet for someone like you would be to go find some angels and not VCs, right? Like find people who can associate with the problem that you're trying to solve, and then try to raise money from them. It's going to be a lot more peaceful, and they'll probably also help you in building your business.
Absolutely. Thank you so much. So it's just a matter of to keep networking and meet those right people who believe in your vision.
Yeah.
Thank you. Thank you so much. Thank you.
Awesome. Thank you for that question, Khushbu. I think the next one is from Bhaskar, if I'm not wrong. Please go ahead.
Hi, Nithin. Very good evening
Hi.
to you. Nithin, when you explained about your journey, one beautiful statement you made about you always think about users. Okay. In fact, most of the founders today, they think build everything for the users. But unfortunately, what happens, the decisions are taken at a corporate level. Okay. I'm not blaming. See, what is in it for me is a CEO and the CXOs are there asking. Whereas I build a system meant for the end users who can become super intelligent with the automation. Now, how to sell with this kind of culture, which is there for quite a long time? But what is your advice? I build the best thing for my users, end users, but whereas my CXO, what is in it for me, for the board, for CXOs? That is what they are asking. I'm not able to connect. The
Yeah, no, I
overselling
mean,
starts there.
yeah, no, I mean, I think it's a problem across the board. Right from Apple to Google to everyone else. I mean, you're seeing so little innovation, right? As in, like, imagine, right? As in, Google ideally by now should have, I don't know, like, found a way to search for what we're thinking in our mind, right? But nothing has really changed over the last 5-10 years. So the thing is, as soon as the focus becomes quarter-on-quarter numbers, right, or year-on-year numbers, it's the entire business is trying to optimize for that, right? Everyone's trying to optimize for how do we make it all look nice versus what is right for the user, right? And but that's really where the opportunity lies as well, right? The opportunity lies as a startup to understand that your competition will really be doing all of this stupidity. So it gives you a window of opportunity to be that platform that can do different. Now, if you can't be different, you really don't deserve to be a startup, to be very honest, right? I mean, if you're going to become like, if I am building a new bank and I'm going to be, acting like, say, SBI or ICICI, HDFC in terms of my decision making, I mean, you don't deserve to be a neobank, really. I mean, you rather go find a job somewhere and work, right? I mean, the whole idea of being a startup is, you're nimble, you're agile, you can do more for your users than what your competition can do, right? And you can do it very quickly, right? If you can't do all of these things, you really don't have any moat. I mean, just making the screen look like white and turquoise and like very modern colors and modern designs is not going to get you business at the end of the day, right? As in because a lot of startups I've seen is just old wine in a new bottle, so it's so I think it's very important to remember that, and it becomes harder as you grow, so as you grow, as the board becomes stronger, as there are more investors, it becomes harder and harder over time. And I think, in the journey of Zerodha, I keep talking about this within the company as well. We are like an elephant that can run like a cheetah, in the sense, and that really is the strength. I mean, I could pick up, one of the conversations, what we are having right now, we will have a call after this, and tomorrow morning we are on it executing. There is no going to, like 10 different places or waiting for 3-4 approvals before we attempt things, right? As in, I think as a startup, you have to constantly tinker, experiment, keep doing new things, because it's very like, when I look back at the journey, 90% of the things we attempted didn't work. It got zero activity, right? But if I had chased saying I'll only do stuff that will get us activity, I'm gonna be perfect before I launch it and all of that, I don't think we would have gotten those 10% of things right, which gave us a lot of business, So I think, I think as a startup, it's very important to understand what are your strengths and kind of play to it, right? I mean, if you are 7'2", you play basketball and not gymnastics, right? As in, so it's I think you you have to figure that out as a startup, so but yeah, again, these are very hard questions, Bhaskar. I don't know what you can tell your CXOs to change the way they think about the business. It's maybe you have to go find an organization that thinks differently.
No?
Thank you.
Awesome. Thank you so much for that question, I think. The next one is from Maharsh. Why don't you go ahead? Thank you.
Yeah, hello Nithin. Really glad to be here. And so my question is that, for a lot of early stage startups, there are situations which are like the chicken and egg problem, that there are a lot of, parameters required for growth, or maybe say, for example, let's just take a situation that for user growth, a product requires some good amount of partnerships as well to really give a good experience of the product. At the same time, the partnerships require a good user base in order to close that particular partnership. So I assume that you might also have had such chicken and egg situations where you wanted to grow, but even you had to gain the trust of the users to start using your platform. So like, how did you deal with such situations?
Patience.
Okay.
I mean, there is really, there is no way. See, the thing is, firstly, I think we all need to understand that one out of maybe a few hundred startups really hit it out of the park, right? I mean, that's really the odds here, right? I mean, if I speak to 100 startups, maybe one survived 10 years, right?
Right.
So, so it is. There is a lot of luck, right place, right time. All of is my voice okay? Are you able to hear? Okay, so yeah.
Sort of, yes. It's
Oh,
cracking
okay.
a bit, but it's okay.
Oh, it is. I'm sorry about this. Yeah. So So the thing is, first thing to understand, I think, is while building, I think one thing that all of us founders have to make peace with is that the odds of success is 1%, right? So the odds of whatever we're all doing this, is very, very little. So second thing is, building a business takes time, right? I mean, for you to get user love,
Right.
to grow organically, I mean, this is all going to take time. As in, don't stress yourself saying, I started 6 months back, I don't have 10,000 users. It doesn't happen. I mean, if you're at the right place, the thing is, it's about, if you survive long enough, you will have more opportunities to be at the right place and right time. If you don't survive long enough, you'll not have those opportunities, right? I think the way to look at this is, how do I increase the odds of hitting it? And then the longer you survive, the higher the odds. For example, for the first 6 years of our business, we had 60,000 customers, right?
Okay.
We added 99,40,000 customers in the next 5 years, right? So so it is, when 2016 Aadhaar happened, an online onboarding happened, there was market started going up, so the bull market started, etc. So so kind of right place, right time happened. And the other, I think, the way philosophy that I've had in my life, which is a bit commonsensical, but the thing is, the more the people want you to get lucky, the higher your odds of becoming lucky, right? What it means is, if your team wants you to get lucky, if your users want you to get lucky, right? And they will feel like you wanting to get lucky if you do what is right for them, right? The higher the odds of you actually getting lucky, right? I mean, it's almost like one of those Bhagavad Gita things, but it makes a lot of sense. Because if you can do what's right for the users, in an online world like today, they will be grateful for you, right? And it's not about doing it with an expectation, because when you do anything with an expectation, it doesn't come across true, right? It comes across like, so for example, we run this education initiative called Varsity. You go to Varsity, 0 ads, no banner ads. We have millions of people who have registered. We have not once sent an email saying open an account with Zerodha, right? Completely done with 0 expectation, right? To the extent that a lot of people who use Varsity think, why is this person even putting so much effort without asking me for anything? Because in today's world, like if someone is doing it for free, right? First thing is subscribe to my newsletter, click on this banner ad, this pop-up ad, right? As in, because if you do stuff like this, it doesn't come across true, right? So I think if you truly want to do what is right for the customer, for your user, the user love will come through. It's just having to wait long enough. Yeah. So, but yeah, once you have users, you're in a position of power, right? I mean, then you don't have to go chase partnerships. People come to you for partnerships.
Right.
So, right. So no one came to us for partnership for the first 5-6 years, but a lot of people come to us for partnership after that.
Yeah.
So, so it's just that. I mean, there's no easy answer to this, by the way. So there is. I think you just have to be patient. And one last thing, I think about the last thing about trading and business. Not just your question, but generally is, I think we all need to have a stop loss. I mean, at some point of time, we need to say, what, dude, this stuff's not working.
Yeah. Yeah. I think we lost Nithin for a while again.
Yes.
But we got the stop loss analogy, I think. So
yeah, totally.
Yes, that was nice. I think we're waiting for Nithin. I think we have just time for one more question. But thanks for that question, Maharsh. I think we'll get Ashish in a minute, as long as Nithin's connection is back and he has some more time with us.
Yeah. Thank you so much, Jivraj.
Sure.
I'm sorry. I don't know why my network is like this, so yeah. So sorry. I was saying, India is stuck to a kind of a bad marriage, when such a large opportunity is out there. So I think it's important that at some point, if things are not working, to say, what, maybe it's time to pull the plug. I mean, that's a very important aspect of building a business as well. So
yeah. Awesome. That's lovely. I think the stop loss analogy. Nithin, very quick time check. Do you have like 5-10 minutes for another last question?
Yeah, sure, we can.
Awesome. Yeah. Lovely. Thanks, Maharsh, for that question. I think we have time for another one. Please go ahead.
Thank you, Nithin. Yeah.
Ashish, Hanwan.
Hey, Nithin, thank you so much for giving us the insight. It was like one of the things I could relate is reading the book Reminiscences of a Stock Operator. Stop loss is before you take any trade. So that was pretty nice. Thanks. One of the things I just wanted to ask, and apologies for being very direct, but on behalf of I think the entire fraternity out here, one of the things which most of the early stage founders kind of lack is how to approach somebody such as yourself, or your both from a perspective of advice and maybe seeking the guidance in terms of how to approach for investments. Even if that turns out to be a no, that doesn't matter, but there is a valuable feedback which actually helps us to kind of grow and learn. So and this is on behalf of the entire team here. I understand nobody's asking it directly, but I'm just taking the leap of faith here.
Yeah. No, I think if someone's solving for problems that I'm passionate about, I respond immediately. Right? I mean, if it is something that's not of interest, I maybe I'll forward it to our team and say, do check it out. Right? So like problems that I kind of associate with. I mean, one is we're trying to help people do better with their money. Two is we think the capital markets ecosystem in this country has to grow. More people. I think we need to help this country financialize, because you need Indians to be putting money behind entrepreneurs and not in fixed deposits, gold and real estate. Right. So we're trying to find, businesses that are helping do this. Personally, I'm very, I think, Indians also need easier ways to make healthier choices. So, I'm generally, I'm very, conscious about health, fitness, and all of that. So I'm trying to, see how we can help, make it easier for most Indians. And then, with the foundation, now we are trying to help, people working on climate change. So these are 4 causes where I completely associate. Now, if people know that these are those 3-4 pain points that is very close to my heart, I think if they draft an email saying how what they're doing will help solve it, I would, respond immediately. I have a lot of my friends who've done extremely well in the startup ecosystem. If I think you need to know whom to approach for what, right, and not do a blanket email, right? I mean, I've seen people just just cut, copy, paste the same content and fire it out to everyone in the founder circuit, right? And you will not get it. As in, it's a sales pitch. I mean, when you send that email out, when you make that first note, you really get. I probably give 10 seconds for every email. So in 10 seconds, if it's not grabbing my attention, that means it's really a pass, right? And cut, copy, paste cannot grab attention in 10 seconds of anyone, right? It has to be personalized for the person. So I think if you're kind of trying to go, forget VCs, professional VCs, but if you're trying to go after people who can bring capital, which is more strategic, which is founders who have some experience of doing stuff like that, I think it's go and listen to all the founders, make a list of 100 founders and say, these are the 5 founders I think will associate with what I'm solving. I forgot the lady's name. She said, she's solving for this math for kids, right? I've been thinking about this for my son, but not enough to be investing in a company, right? But I'm saying if she can think about, go list out, say 5 or 10 founders, listen to them, do some research, and then reach out to those specific folks. I think a lot of founders today want to kind of invest. There's money made in the ecosystem, so a lot of people are looking at opportunities. I'm sure Jivraj would say, a lot of people on angel list as well, and right, a lot of, I think India is right now seeing a bull market for angel investors. So you just have to position your pitch right and personalize it and send it out. I think you'll get a response. So I'm very optimistic about that, Venus.
Thanks, Nithin. That's very hearty to know. And thankfully, we are in one of the 4 sectors that you talked about. So that's pretty good. We are working in the climate change. So thanks.
Awesome. Thank you so much for that question, Ashish. Awesome. I think though that's the time we had with Nithin, more or less from a broad lens, and maybe to get this session to a close, which we've covered, where we covered a bunch of things from compounding to sustainable innovation and then bootstrapping your way to success. I think for the last question, once we have Nithin back, maybe we can have a conclusion to the session, and that'll bring us to a good close. I think the connection's a bit of a problem for him, but once he's back, we can do a last question. If anybody from the audience has more questions, feel free to direct it to the Bits team, and I'm sure they'd be helpful. Hey, Nithin, thanks.
Sorry about it. I'm feeling weird.
No worries, I guess. One of those days, I suppose. But no, I think this has been fantastic. We had a very robust audience, and those were the questions from the audience. I think just to bring this wonderful discussion to a close, there's a lot of negative sentiment going around in the ecosystem right now around the funding winter, things like that, right? And you've spoken a bit about this in the past. If you had any, just parting words of wisdom, as they call it, any learnings for how to cope up with such an environment, or maybe just shun the noise, or what is your general rule of thumb for something like this, and maybe any parting lessons for building companies which are generational in nature, I think that'll be a great summary to what has been a wonderful chat.
Right. Yeah, no, I don't think it's funding winter for early stage startups. Right? I mean, it's so I think it's a proper bull market, right? I think there's a lot of interest in investing in early stage companies. I mean, even the folks who write hundreds of millions of dollars of checks are writing $1 million checks. So I don't think it's really I mean, at least the crowd which is here, the audience which is here, doesn't really have to worry about funding, at least for now. About building sustainable businesses, I think spending to grow is an issue, because as soon as you start spending to grow, you have to compromise in the way you run the business, right? As in, you have to go raise more money, which potentially means that you have to oversell to customers. I mean, oversell to your investors, which means that you will potentially have to put in situations where you don't do what is right for the customer, right? So these are all issues that can happen. So I think it's okay to grow slow, but I think growing sustainably is something. Like I said, I don't know if this makes sense, right? Because like so many good businesses, great businesses have been built in a different way. But like if you were to ask my philosophy around this, I would say take it easy. Building a business is like is growing a tree. I mean, it takes time before the tree fruits, and you can't just force a tree to start fruiting really, really early, right? As in the last 2-3 years have been outliers, as in businesses can't be built as fast as possible, as fast as what we've seen in the last 3, 4, 5 years. So yeah, and then take care of your team, because at the end of the day, really your team is really everything behind a business, and it's very important that they are happy and content as well in this.
Absolutely. I think that's wonderful to hear, and coming from you, especially just the way to build a business in the way that you have. I think I have certainly enjoyed a lot, and I hope the audience has as well. We've had a really wonderful audience on a Tuesday evening, if I may call it that. So yeah, I think this has been great. Over to the BITS team. Nithin, just a small request. I think if you could stay back for a couple of minutes, the team would want to chat with you offline. But thanks to the audience for sticking around, and thanks, Nithin, for being such a wonderful guest.
No, pleasure. Thanks for having me.